What's up? It's Adam here from Trader UK, the channel where we discuss money management and how to grow your wealth. Today, I'm giving an updated look at my £30,000 stock portfolio. Before we get into it, I'm going to ask you to do the same thing that I always ask you. Hit the like button, leave a comment, and most importantly, subscribe to the channel so I can keep you up to date with all my future content. Now, when I last saw you for one of these updates, it was at the end of April and the portfolio was sat at around £20,000. It's now the end of May. In fact, it's the 1st of June today, and the portfolio sits just under £30,000. Before we get too carried away, I did introduce a further 5,000 of capital towards the start of the month, and then the other 5,000 are genuine gains, which is pretty impressive. It's a 20% increase in the month of May, so I want to share with you where the gains are coming from. So I'll log in to Degiro, my choice of platform, and then we'll run through stock by stock to see what's happening. Okay, you can see the portfolio summary in the top corner here, top left-hand side. Balance £29,850-ish. Portfolio balance 29,122. That's how much I have invested, with 725-ish as a cash balance here. Okay, I'm going to organize these by value. In fact, they're already organized by value. We'll start from the top and we'll work through each one at a time. At the top, we have Whitbread NP. Whitbread, this is actually with regards to a rights issue that's going on at the moment. So we're going to brush over this one and then I'll circle back to it at the right time. But that's not actually an investment that I've made yet. The first one will be Marston's PLC. Marston's PLC is a UK-based brewery, pub owner, bar owner, very big in the north of England. I purchased 400 shares at 32 per share. Remember, this is GBX point, so that's 32 pence per share. So it's penny stocks, really. This one is really bittersweet for me. I purchased them a few weeks ago on the basis that at 32 pence per share, it was really good value. I didn't know, I guess nobody did, that they were just about to sign a big partnership deal with Carlsberg and their share price doubled overnight. So if you look at it there, 102% gain, that happened overnight. Something like 200 million cash investment into the company, a 700 million partnership. So it's great that I've made that money, but when I invested, I only purchased 125, £130 worth of shares. So it's one of those where you just wish you had bought more. But definitely one, considering that partnership now, one that I'll be holding on to. And possibly I'll look to increase that at some point. Then we have two companies below, GlaxoSmithKline, GSK, Johnson & Johnson as well. Both of these two companies I purchased throughout the month, and I purchased them both for the same reason. I have lots of investments, lots of companies here that will do well if we get some good news. They'll perform well when we get some good news. I don't have many companies that will perform well if we don't get the good news, if we continue the way we are at the moment. So I added these ones in here. They're solid stocks, solid companies, dividend stocks rather than growth stocks. So I added them in as more of a security measure than anything. Then we have Facebook. Facebook has been performing really well, actually. I don't think there's ever a bad time to buy into Facebook, but I think I got this at a pretty good price, close to 40% gain so far on my Facebook investments. And then that brings us on to Whitbread. So these are the shares that I own in Whitbread, 15 shares at £25 a share or so. They're currently sat at. They have issued a rights issue. So for every 2 shares that you own, you can purchase 1 new share at a discounted rate. What you're seeing at the top of the screen here is the value of that rights issue if I want to sell it. So I'm actually going to post a video tomorrow which goes into more detail on what a rights issue is and how to execute it, because it can be a little bit confusing and you need to execute, you need to act on it, otherwise you end up losing out. But I'll post that one tomorrow. But Whitbread, I'm not really expecting much from this one for at least another month or so. but I will be taking up that rights issue as well. I like what they've said. They're being proactive and they want to, rather than just survive what's going on, they want to thrive. So I will be taking up that rights issue. Then we have Roche. Roche are a Swiss company. They make the antibody testing and virus testing kits. So it's another one. I bought them for the same reason as GSK and Johnson & Johnson, more of a safety net rather than anything else. Coca-Cola Company and McDonald's, again, both purchased throughout the month and both purchased as they are solid dividend stocks that I thought I found good value in. Both of them are performing okay at the moment. They're new to the portfolio. They're not really growth stocks, but I thought I got a good price in them. Coca-Cola at $43.44 a share, McDonald's at $181 per share. Then we have 3M Company, the maker of the N95 mask and a number of healthcare products. I did already own some shares in this company before, but I have pretty much doubled the holding for the same reason as I purchased Roche and Johnson & Johnson and GlaxoSmithKline to pad out the portfolio with some solid pharmaceutical companies. The pharmaceutical holders now make up just over 6% of the whole portfolio, and that's probably where I'm going to leave it for the moment. Walt Disney Company, one of my favorite investments in this portfolio. It's starting to perform a little bit better now. I thought I got good value on it at $103 per share. This one, I like the idea of their Disney Plus platform. I think that's going to do really well, and I think I got a good price at 103. Then we have EasyJet, the UK-based budget airline. This one's starting to see a little bit of hope now, 22% gains so far. And I believe they should be opening up some of their routes throughout July, so that should see another increase. Same kind of story with On the Beach Group below. Similar size, the investment here, and this one close to 30% gains. However, you can see here, there's a large loss sat there. I used to own a much bigger holding in On the Beach Company. It's a package holiday provider, an online one in the UK, and I reduced that at some point, March, April kind of time. So I've reduced the holding. Since I rebought in, it's made about a 30% profit, but I've still got that big loss there. So a bit further to go with this one. Although, again, starting to see some signs of hope from this company. Then we have Beyond Meat. Beyond Meat, initially I purchased as a speculative stock. However, I've expanded my position. I've made it a bigger part of the portfolio. I don't really think it's a speculative stock anymore. The news that they've been announcing, the partnerships with Starbucks, with McDonald's, they've moved into profit now. The market has suited them perfectly with meat shortages in the US, more and more people trying their products. So I think it's a real solid one now. We also have Upwork, which I've added since the last video I made. Upwork is a platform that connects people that need freelancers with freelancers. It's a platform that I use on a regular basis. I like it, I use it, and I always like to invest in things that I like and use. We're not unique. If I'm using it, then I'm sure lots of other people are finding it useful as well. So I've purchased £781 worth of shares in Upwork. Now we move on to Carnival Corp, the first of 3 cruise line companies in the portfolio. The cruise line companies were purchased purely on the basis that I thought they were good value at the time, and that's starting to show reward now. So 11.69% profit so far, but I'm expecting a lot more than that from them. Then we have Revolve Group. Revolve Group becoming a bigger part of my portfolio now, somewhat because of the gains that they made, 41.59% up so far on this one. I did get them at a good time, at a good price. They are a luxury online goods supplier. They sell very expensive clothing, handbags, that kind of thing. So it's a bit of a difficult one to know whether the current climate suits them or not. Being an online retailer, obviously lots of people shopping at home for the moment. but selling luxury goods in a downward economy, probably not the best product. So it's a difficult one, but I'm holding on to them. Although Uber have been having a tough time recently, lots of changes within the company, losing lots of staff, they've actually performed pretty well, 30% up to date. Then we have Norwegian, the second of the cruise lines, 72.68% up so far. Like I said with Carnival before, it's purely a case of getting them at a really good price. And again, we're seeing that now. We have Alphabet seeing solid growth, 21%. Royal Caribbean Cruises, my final cruise line investment, 89.76% up so far. They're the best of the three. Now we're moving on to the slightly bigger investments. We've got Ocado Group, the UK-based online retailer. This is the best performing stock that I've had, 115% gain so far on this one. If only I'd have bought more of these. I think there's more to come from Ocado, so I'm going to hold on for at least a couple more months until they announce their mid-year profits. Then we have Amazon. Again, Amazon, I don't think there's ever a bad time to buy shares in Amazon. 27.88% profit so far. We also have Tesla. Tesla is actually the third largest investment in my portfolio with a value at the moment of £2,871. £1,004 of that at the moment is profit. So it's an absolute machine, Tesla. It just doesn't show any signs of stopping. The second largest investment is TUI AG. These shares drop down to around or just under €3 per share. They're back up near €5 per share now. So I think the tide is turning with these ones. We've still got a big loss sat there at the moment, but I think give it a couple more months and we should see that disappear. And then the same story for the largest investment, Dark Group PLC. Finally, we're seeing that loss disappear now. But again, they need a couple more months before we'll see any huge change. Now, with the larger investments in the portfolio being Dark Group that operate Jet2 holidays, we have TUI AG, we have the three cruise line providers, EasyJet on the beach holidays. About 45-46% of the portfolio is travel and tourism based, which is a very high percentage, a very risky percentage. I do believe that we've been through the worst of it now, so I'm going to see it through, but I will be reducing that at some point. We'll reduce the exposure, probably down to 20-25% of the portfolio, but I'm not going to be doing that until next summer. And finally, at the bottom here, you can see the dividends that have been paid recently since I made the last video. We have GlaxoSmithKline paying a dividend of 19 cents per share, 3M Company, $1.47 per share, Johnson & Johnson, 101 per share, and McDonald's, 125 per share. To be honest, I wasn't expecting any dividends from any companies this year, so anything is welcome, but you're not going to see any huge dividends coming out. That's everything for today, guys. It's just to keep you up to date with what's going on in the portfolio. Let me know what you think in the comments. Let me know as well which industry you are most exposed to. Don't forget to like the video and subscribe to the channel, and I'll see you next time.